Hi, I'm Jimmy. In this video, we're looking at Microsoft stock. So we're going to look quickly at Microsoft's business, then we're going to jump in and look at some recent updates, specifically around their most recent earnings announcement. Then we're going to try to go through some of their key numbers, look at some charts, and then finally try to come up with a fair value for Microsoft stock and see if it's worth buying today at the current price. Okay, now before we jump in, I just want to tell you real quick, this is a website. Everything we're doing today is on this website, investorsgrow.com. If you'd like to get access, link in the description below. But the real reason I bring this up is I just want to point out they just came out with earnings. We're a day after. I'm shooting right now a day after they came out with earnings. The stock closed down about 1%. Now, that's better than what happened when it came out of the gate, because out of the gate, it was down after hours about 7%. But then by the time it closed yesterday, it was down about 1%. Now, when we zoom in on the chart, we can see that over the past week or two, the stock, Microsoft stock, hasn't done all that well. It's kind of pulled back a bit, along with a lot of the other big tech stocks out there. So we'll keep that in the back of our mind. But for now, let's jump in and look at some individual segments from Microsoft's business. Okay, now the reason we're using this particular chart is I just want to point out how diversified Microsoft's business is. The big news has been around their cloud business, their intelligent cloud, their Azure, their development towards, getting more AI products to market and ideally making profit out of some of those AI products. But they have a super well diversified business. They obviously have their cloud businesses. They own LinkedIn. They have gaming. They have the Xbox platform. They recently bought Activision. They have their Windows products. They had news and search. They generated a ton of revenue from a ton of different places. But as I pointed out on the most recent earnings call, although their numbers weren't that bad, these are quarterly numbers. So they recently reported fourth quarter earnings. Now, I just want to point out their fiscal year ends at the end of June. So they reported fourth quarter earnings. And for the quarter, they didn't do too bad. They beat revenue slightly. They beat earnings per share slightly. That wasn't that bad. If we look at the full fiscal year 2024, so they just completed their fiscal year 2024, they missed ever so slightly. But again, all the news that was coming out, the reason the stock had pulled back after earnings was announced was that they missed on expectations around the cloud. In fact, you might see articles similar to this or headlines that look something like this, that basically their intelligent cloud business didn't perform quite as well, although they beat slightly. Now, yes, it's an important thing to consider, and I think it's a minor disappointment that they didn't beat from that perspective. But I just want to keep that disappointment in perspective. So this is a chart this is a table that came directly out of Microsoft's earnings press release, and this is showing year-over-year growth in individual segments. So they show their top line here, Microsoft Cloud, up 22%. If we were to zoom down just a little bit over here, well, we can see that their Azure and other cloud services was up 30%. Now, it was up 30% from the previous year, but expectations were that it was going to be up closer to 35%, hence the disappointment. But I just want to keep that disappointment in perspective. They grew by 30%, but not quite 35%. So the stock did have a minor pullback, but frankly, I'd be surprised if that pullback lasts too much longer because of the disappointment out of earnings. That being said, let's jump over and look at some of the charts to help us understand the numbers a little bit better. So the first chart we're going to pull up is actually one I'm going to go a bit out of order here. First one is capital expenditures. Again, this was a big point of discussion around earnings amongst analysts, amongst a lot of different things that were being talked about on Wall Street regarding Microsoft. And basically, this is a big jump in capital expenditures. Now, just so we're on the same page, capital expenditures is a cost. It is how much a company is paying to, let's say, maintain or improve their business. So if a company like Microsoft is building new data centers, well, that would be an incurred cost here. So one of the big questions that has gone around is if they're going to increase their cost, and clearly capital expenditures has increased a lot from the previous year. Well, if they're going to increase their costs, specifically around the development of AI and the development of, getting more data centers, bigger data centers, better data, more up-to-date data centers, things like that, well, is that going to pay off over the long run? Well, we can kind of tell whether or not it's working when we jump over and look at free cash flow. So, in order to come up with free cash flow, we take cash flow from operations, we subtract CapEx, capital expenditures we just looked at, and what we end up with is free cash flow. Ideally, you want this number growing. Now, generally, if you're going to increase capital expenditures a whole bunch, the only way to keep growing free cash flow, like this chart has, is by growing cash flow from operations more. And as we can see, there was a pullback last year, but then in the most recent year, the one that they just reported, they closed out the other day, that number has moved higher. So although they have increased capital expenditures, clearly they are increasing cash flow from operations even faster. And just to verify that, operating cash flow we can see jumped from 87 billion up to 118 billion. So we knew this was going to happen, but it's good to see it on the chart. Significant jump there. Okay, now let's go a little bit more in order, jump over and look at revenue. So not a lot to say about this. Revenue is climbing higher, moving nicely, recently climbed up to about 245 billion for fiscal year 2024. That's going strong. When we jump over and look at net income, well, we can see that net income, profit, how much of revenue turns to profit? Well, net income, again, looking fairly well. Now, one of the questions that popped in my mind as I was doing the research on Microsoft is I was wondering, has their investments in artificial intelligence hurt their profit margins? Well, we can see profit is climbing higher, but what about profit margins? How much is for every year of net income? What is that as a percentage of revenue? Well, we can see that on this chart here. Net profit margins is for every $100 in revenue, what percentage, how many out of those $100 turn into profit? Well, here we could see most recent year is about $35, $36. So mid-30s profit margins is fantastic for most companies. Now, technology companies tend to have higher profit margins, but a company like a Walmart, which is more of a commodity-based business, they have some pricing advantages, but not a lot of, they really sell a commodity type business. They sell t-shirts for the lowest possible price, so they end up with single-digit profit margins. Microsoft up in mid 30% profit margins is crazy from a business perspective. And ultimately, a lot of that is going to get reflected in how we value the company. But before we jump into the fair value, I just want to point out that they also announced a dividend, 75 cents a quarter. And as we can see, this is their dividend history. Their dividend has consistently increased. So if it is a dividend stock, although they have a relatively low dividend yield, if it is a dividend stock where after Microsoft is, I believe, a great business, but also a good dividend. Now, just to make sure, we saw profit going up and we saw dividends going up. Well, this is a chart on net income coverage. How much of profit do they have compared to how much they pay out in dividends? And again, we can see that they're consistently covering the dividends. So this 4 or so means that they have 4 times more profit than they pay out in dividends. So there's really no question whether or not they can continue to afford their dividends. So a lot of times this is a great number to look at if you're looking for stability of dividends. That being said, let's jump back to free cash flow to try to come up with a fair value for Microsoft stock using discounted free cash flow. So we can see that free cash flow, historical free cash flow numbers have grown quite well, grown fairly steadily. And then when we jump up to a chart that shows free cash flow, historical numbers, and estimates, well, we can see that analysts are expecting for those numbers to continue. So here, the blue bars, dark blue bars, are historical numbers. Then the green bars are analyst estimates. Now, with each bar of analyst estimates, the website actually tells you how many analysts are used to project that number. In theory, the more analysts that we're doing, we take the average number, the more analysts, year one, 27 analysts, that's better than, let's say, if there was 1 analyst. So analysts are fairly good at coming up with numbers. If you think about a company issues earnings per share, analysts, they say the company missed earnings per share, but really, didn't the analyst kind of miss the earnings per share? But that's neither here nor there. Point is, I have found that historical analyst numbers tend to be fairly reliable. And we can see going out the next 3 years, we have analyst estimates going up the next 3 years from Microsoft's free cash flow numbers, and they have it growing up to 122 billion with their 2027 number of 122 billion showing a decent jump, which is right around when they're expecting for a lot of the investments, today's investments, the increase in capital expenditures that we saw to really start paying off. And then we actually extended this out a little bit further. The blue bars are computer estimates based off of inputs that we put in. And the reason I went out a little bit further is with discounted cash flow, the baseline assumption is how many years are going to go out? Let's say we just went out to 3 years, and then you choose a perpetual growth rate. Typically, that growth rate would be somewhere near the long-term growth of the economy. Call it 2.5%, 3%. I use 2.5 because it's a bit more conservative. But in the case of a company like Microsoft, or a lot of faster growing companies, it doesn't make sense to go out 3 years and then stop and assume 2.5% growth. It's a bit too conservative. So the website, you set a growth number and then it tapers off that growth. So the growth from 1 year to the next will gradually decline, getting us closer to 2.5%. Basically, just smooth out the growth rate a little bit. And if you want to see what that looks like, well, this is a chart on their free cash flow growth rate. So we can see analysts actually have their free cash flow growth rate ramping up. And then to try to be a bit more conservative with the numbers and try to get a more accurate look at what the fair value for Microsoft stock could be, we kind of tapered it off a bit, assuming that at the end of this time period, it grows at a perpetual growth rate of 2.5%. So again, still a bit conservative, but I'd rather be conservative than be a bit too aggressive. So with those settings, we get a fair value for Microsoft stock of about $290 per share. As of the recording of this video, Microsoft at last traded at about $420 a share. And I personally own Microsoft stock. And it's just too high to consider adding more here. So I really hesitate on buying Microsoft stock as much as I love the business. And I think Microsoft is a fantastic business. I think for me, on a personal basis, for my portfolio, it makes more sense to wait for a pullback in this great business to buy as Buffett says, buy a great business at a reasonable price. This price is not a very reasonable price in my view right now. But I'm curious what you think about Microsoft stock in general and about their long-term outlook. I do think that these numbers are a bit conservative. But again, I'd just like to see a bit of a pullback. Let me know what you think in the comments below. And if you'd like to sign up to get access to this website where we have all the analyst estimates, come up with the fair value for stocks quickly and easily, I will leave a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.